Guruji, I have a question. How can one businessman avail loans from bankers? Are you talking about the MSME sector? Yes, Guruji.
And finally, the most important concern is how to forecast their revenue and expenses while setting yearly targets.
See, most small businessmen do not prepare, read, understand, or analyze their profit and loss account. They think this document is required mainly by big companies and it is not necessary for small businesses.
Okay.
But as business grows year on year, the issue for most businessmen is how can one determine their income tax obligation and other statutory obligations?
So what actually they need to do to solve this problem?
A profit and loss account is not only the statement of income and expense, but it also enables you to increase your earnings by reducing unnecessary expenses and increasing incomes by ratio analysis. Can you please explain in details the purpose it solves? Sure. See, the profit and loss account provides information about an enterprise income and expenses which result in net profit and loss. It helps a businessman to evaluate the performance of an enterprise and provides a basis for forecasting future performance. It also provides valuable information required by a banker while sanctioning a loan. The profit and loss account describes different business activities such as revenues and expenses, particularly useful in assessing the risk of not achieving certain level of income in the future. It also provides information required to determine tax obligations. Now I clearly understand the purpose of it, but can you explain the process of doing profit and loss account in brief? Are you asking about the steps? Yes, Guruji. I can explain it in 5 easy steps. Step 1. Keep clean records. You have to have a clear-cut record of how much money is coming into and going out of your operations. Step 2. Select the time period. Before you begin preparing your P&L statement, you first have to ascertain which period of time you will be looking into. In general, it is from 1st April to 31st March. Step 3. Find your revenue. Revenue comes from the total amount of money that your business has taken in from its various endeavors. In general, your revenue will come from the sales of products or services. Step 4. Find your expenses. Every little things you have spent money on for your business during the period of time you have selected needs to be taken into account. These are your expenses. You might have to consider other factors as well, like return or refunds, credit rate and debit notes, provisions if any. Step 5. Find your profit number. Profit is derived from revenue minus expenses. So calculate that to determine your result. If you would like to, you can also determine your net income, which is your income after tax. Now it is absolutely clear.
But Guruji, why does balance sheet come in between?
Only through the balance sheet you will be able to derive the assets and liabilities.
It is difficult to understand what you are saying, Guruji. Could you please explain and make it simple?
Okay, listen carefully to the story of Bill Gates, one of the richest men in the world. Bill Gates and Paul Allen are two close friends.
Paul, I have completed my computer engineering in Howard University.
That's great. Then what are your future plans?
I'm thinking of starting a software company. Would you like to partner with me?
Sure, I'm glad you came to me. What do you think we should name the company?
I'm thinking of it as Microsoft.
Great name. Let's go with that. How about we invest $20,000 each and take the shares equally?
Sure, I would like to do some research to create a software which is user-friendly.
Okay, then I will help you in that.
Look, Paul, I have made the software which is user-friendly.
Wow, this is great. Let's get patent rights for this so that no one else can steal it.
Okay, then we will get the patent rights and start selling it.
I believe it would be better if we have our own office and improvise on stuff. Let us take a loan of about $50,000.
That's the great idea. Let's go ahead with that.
Once we have our own building, we need equipment too.
Let's go with getting the equipment on credit.
Good idea. We can pay back once we make profits.
Now that we are earning profits, I am curious about the overall picture of our company. Let's hire a finance manager for this task.
This is Jennifer. I hired him after multiple interviews for the finance post.
Jennifer, prepare a balance sheet for the company. I am curious about the numbers.
Sure, sir. The balance sheet consists of assets, liabilities, and equity. It states that assets is equal to liabilities plus equity.
What are assets?
Assets are current assets plus non-current assets. Current assets consist of cash, accounts receivables, inventory.
Then what are non-current assets?
Non-current assets consist of tangible and intangible assets. Tangible assets are the ones which are physical, such as plant, property, and equipment. This building and equipment comes under this. Whereas the intangible assets are non-physical assets, such as patents, license, and secret formulas.
So the patents and license that we have for our Microsoft software comes under intangible assets.
Yes, sir, you are right.
What about the liabilities?
Liabilities are what the company owes, which is current liabilities plus non-current liabilities.
Then what are current and non-current liabilities?
The current liabilities are the accounts payable, which is the money owed to the suppliers when purchased through credit, current debt, and current portion of long-term debt. Excluding the current portion of long-term debt and the bonds payable is the non-current liabilities.
Oh, then what is shareholders' equity?
Equity is the addition of share capital and retained earnings.
What are they?
Share capital is the value of funds that shareholders have invested in the company when the company is found. In your case, it is the amount both of you invested in the company.
And what is retained earnings?
It is the profit that the company generated over time. This can either be remained in the company or shared as dividends. All this together make the balance sheet.
Great! I got a clear idea what makes a balance sheet.
Now, sir, we can write the balance sheet for our company using the information that we have.
Okay, Guruji.
Now we completely understand what makes a balance sheet.
Thank you.